Hey traders, Clifford, Forex Ninja, back with another video on trading the charts. So today I wanted to take a step back and make a video for beginners, which teaches them the basics of technical analysis. And each video is going to be only about 10 minutes long to keep it short, a nice short video series geared towards beginners. And basically a lot of what I show you in this video, you'll really benefit from because this is how I trade all of my trades, all of my articles, all of my pretty much everything I publish is based on these concepts. So with that being said, let's get started. Okay, so technical analysis. What is it? Basically, technical analysis is the study of price action and future, actually, I should say it's the study of price action to forecast future prices of asset classes. So basically, it's the study of the current price to try and forecast future prices. Basically, you're studying the chart to try and forecast where the price is going to go next. But why do we even need technical analysis by studying the charts? I mean, the truth is you could watch the news, read about the latest stock that's coming out and do a lot of research, fundamental research, and a lot of investors do it that way, CNBC and everything, and that's great. There's nothing wrong with that. However, if you truly understand charting, you'll see an even bigger picture of whatever market you're looking at. A lot of information is displayed on the charts, and every chart tells a story, and you want to see what that story is because it's going to benefit you a lot by knowing where the prices could go, where the markets are going to go next. The nice thing about technical analysis is what I show you in this video can pretty much be applied to all market classes. I'm a Forex trader. Occasionally I do trade the stock market index as well, like the S&P 500, sometimes the crypto market, commodities, stocks, whatever you're looking at, this can apply to it. So it applies to all markets, technical analysis. Okay, the other thing I'll say is that indicators. You actually don't need indicators to use technical analysis. Now, some people may not agree with that statement, but in my opinion, the best indicator of all is price, and I'm going to show you why. So another thing, you do not need indicators. I don't use indicators. I only trade by what I see off of the charts, which I'm going to show you the exact same way. All right, so first thing, when you pull up your chart, the most important thing, in my opinion, is the time frame. Now, I only use daily charts, and the reason I choose daily charts is because a daily chart is showing you each candle on the chart. See these candles right here? They all represent a 24-hour period of trading in the market, pretty much. So that's what you want to look at, in my opinion. If you're looking at a lower time frame, like let's say, you drop down to like one of these, I don't know, 5-minute charts or something like that, you may not be seeing the big picture, and you want to know the big picture. So use the daily charts because the daily charts are going to show you the end of the whole trading session. You're going to see where the banks and the hedge funds and the financial institutions are really pushing the price, and that's what you want to see, in my opinion. Because if you're looking at a 5-minute chart and it's going all over the place, but then at the end of the day, that's what you really want to pay attention to. Where does the market open and where does the market close? Forget about what's in between. It really doesn't matter. And also, in my opinion, you don't want to watch the market all day. You just want to trade, look at it maybe like 10 minutes a day when the market's closed. That's when I make my trading decisions. All right, so here we go. Let's talk first about market movement. Now, the market can actually move 3 ways, okay? The market can move up, which you're probably already aware of. Very basic stuff, but again, it's important to understand. Market can move down, and the market can move sideways. 3 ways that the market can move. Basically, the market moves in trends, and a trend is basically an upward moving market. Okay, so you could have an uptrend, you could have a downtrend, or you could have a sideways market, which is no trend. So let's take a look at that. So here's a market I got up here. Let me just pull one up to show you what I mean. So let's look first at what is a uptrend. It's important you understand what is an uptrend, so that way you can understand the basics of technical analysis. So basically, an uptrend is a market that is consistently moving higher. Here's a chart of the, now again, this is a daily chart. This is the British pound that we're looking at now, but you could look at any market. You could look at a stock, you could look at your favorite company, whatever, crypto, whatever. So this is the British pound, again, that we're looking at now. So what defines an uptrend? Well, again, it's an upward moving market, but more importantly, when you look at the chart, so here's a low. Now again, each candle represents 1 day of trading. So here's a low in the market. Okay, here's a low, here's a low, here's a low, here's a low. But if you notice, this market is forming what's called higher lows. You see how here's the low, but here's a higher low. Here's another higher low, another higher low, higher low, higher low, higher low. So we have an uptrending market, higher lows. Another thing that classifies as an uptrend is higher highs. So here's a high price of the market, high point of the market, but here's a higher high, higher high, higher high, higher, 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 high, and all the way up to, the top, right? So that's basically an uptrending market. Higher lows, higher highs. Pretty simple stuff. But the most important thing is that you're able to see that on the chart, because technical analysis is a little bit like art. It's all about trading what you see. So what you see on the chart is what you want to trade. So now let's move on to a downtrend, just to show you the difference. Just like a mirror image, basically. Basically you flip the market upside down, that's a downtrend. Flip it up again, flip it upside down again, that's an uptrend. So a downtrend is basically the opposite. Instead of what we talked about earlier, you have lower highs. See, here's a high, here's a lower high, lower high, lower high, lower high, lower high, all the way down. These are lower highs, okay? And another thing that also is in a downtrend is lower lows. See, here's a low, but here's a lower low, then another lower low, then another lower low, and another lower low. So there you go. That's pretty much how that works. That is a downtrending market. Now, the third way the market can move is consolidating, or what I call channeling, sideways moving market. So what does sideways mean? Well, basically, it's not an uptrend, okay, because you're not getting higher lows and higher highs. It's not a downtrend because you're not getting higher lows, lower highs and lower lows. So you have basically what's called a sideways moving market, which is this right here. As you can see, it's really not making anything. And so basically, to find out where the sideways moving market is, basically you look at the chart and you kind of, again, this is a little bit like art, so you are going to use some drawing skills here, but it's not really difficult drawing skills. You just kind of you're going to put some lines by where you see the price is sideways. So here's a sideways moving market, and as you see, boom, you could put a bar here and a bar here and another bar here, and as you see, it's just consolidating. It's not trending, it's just going nowhere. It's kind of like watching paint dry. But eventually something happens. Like here, supply and demand is, it's kind of like whatever. It's like there's not a lot of demand, there's not a big supply. It's just kind of like at its middle point. But eventually something happens in the world where supply and demand changes, and boom, what do you get? Another uptrend or another downtrend. So that's basically how that works. The other thing I'll mention is when you're looking at your market on a daily chart, again, use the daily charts. I highly recommend it. It's not only important to see the trend, but you also want to try and learn how to draw the trend. And to do that, we use something called a trend line. Now, this is called TradingView. It's a free software that anyone can use, but you can use any chart software you want. But basically, you draw a line connecting the lows like this. See how I connected the lows right here? Basically, you know, you're connecting the lows, make blue for up, red for down, but so here's a low, and then you're connecting it to this low and this low. It's kind of like connect the dots. Here's a low, and basically you're connecting those lows. Another very important thing about an uptrend, you want to be a buyer. You want to be a buyer. Uh, the current is moving up. So you don't want to go against the current. You want to be a buyer. When it dips, buy. When it touches the trend line, buy again. So you could have, you know, like you see an upward trending market like this, you know, you're a buyer here, you're a buyer here, you're a buyer here, you're a buyer here. Every time it touches the trend line. Let's flip it over to the downtrend now. So here's a downtrend. Now, again, we know it's the opposite. So instead of being a buyer, basically, it's the opposite. So we want to be a seller. You want to be a seller. In my opinion, you do not want to go against the current. That's like going against the waves in the ocean, and we know what happens if we try and go against the waves. So here you go. You draw a downtrend line. How do you draw it? You try and connect the highs. So here's a high, and here's another high, or actually, sorry, right about there. There's a high, and you just connect the highs. And again, every time the market comes near the trend line, you want to sell. You don't want to be a buyer, you want to be a seller. The trend is your friend. That's an old saying in technical analysis, and it holds true to this day. You know, every time it comes close to the trend line, boom, short it right there. Sell it there, sell it there, sell it there, sell it there, and you're going to be on the right side of the market. And then finally, back to our sideways channel on the this other market we're looking at. By the way, this sideways market is crude oil, if anyone wanted to know. So yeah, and now in the sideways market, of course, you don't want to be a buyer, you don't want to be a seller. What you want to do is kind of like be like a cat. Just wait and watch. It's like watching your prey, and then all of a sudden you're going to jump. But you don't want to jump too soon. You want to jump. So here, I'm going to draw a little, this is called a rectangle or a sideways moving, this is called a narrow sideways channel. And the reason it's called a channel is because, again, the market's just channeling. It's not going anywhere. It's like I said, it's like watching paint dry. It's boring. Most traders fall asleep in the sideways market, and that's the last thing you want to do because it's like winding a spring. Eventually, it will break. And when there's a breakout, huge fortunes can be made. So be like a cat and just wait. Now, where would you want to buy? Well, again, you want to buy when it breaks the channel. So, you know, if you're looking at this market, this is crude oil once again that we're looking at. You know, so we're looking at the crude oil market, and we know we want to be a buyer or a seller, but of course we don't know when to buy or when to sell. Well, actually you do, because look at the trend here. Oh, sorry, not the trend. Look at the channel, right? So here's our channel, right? And the channel, as you see, I'm putting in some lines here so you can see the channel more clear. So here's the channel. So we're channeling, and then when do you buy? Right here, when it breaks out of the channel. If you buy on a breakout of the channel, I'm telling you, you better be ready for a wild ride. Put on your seatbelt, because let me tell you, these channel breakouts are the biggest moves in the history of the market. And if you don't, if you want to Google, just Google narrow sideways channel market breakouts, you know, and you're going to see that if you go back in time and you look at channeling markets, you'll see they led to the most explosive moves in history. So, and actually, here's one right in front of us. This is crude oil. Look at this thing. It was channeling for about, what is it, like, I don't know, maybe June, maybe like 5 months. And then look at this thing. It broke from $44 all the way to $74. People made a fortune if they bought on this breakout. So anyways, I don't want to overwhelm anyone, especially who's new to trading, but I just wanted to give you some basics on technical analysis. So you learned 3 things today. Basically, you learned what is technical analysis, why we need it, how it applies to all markets, Like I said, you don't need indicators. And now you learned 3 ways the market can move: uptrend, downtrend, sideways channel. And pretty much that is we're going to go on ahead and end it there for now. Take a look at some charts, try and find some uptrends, try and find some downtrends, try and draw some trend lines, and try and find some channels. And let me know how you guys do with that. And that's about it for this video. If you enjoyed the video, feel free to like, subscribe, put your comments below, and I look forward to seeing you guys in part 2. Thanks again for watching.